Richard, so much pessimism about Chinese stocks. And I think the incoming leadership change doesn't help either. There is so much uncertainty here. Yet you think that's actually a good catalyst. And there is a bull case for China stocks. Why?
Yeah, I think you have to be not totally down on China. But first of all, stocks are cheap. Shanghai Composite trading at about 12 times earnings. That's almost as low as it's ever been, less than 12 times earnings.
Mm-hmm.
So...
But that was last year's earnings. Earnings growth actually have been negative this year. So
this is one of the reasons. Right. So you have policy initiatives beginning earlier this month. Beijing cut interest rates for the first time since the financial crisis.
Right.
They have other tools as well they can use.
Yeah. May not be so effective, though, as we see lending has been quite sluggish despite the lower interest rate.
But it takes time for these things to come through. Again, I'm presenting the bull case here. Mm-hmm. The third thing is gradual liberalization of access to investments in domestic stocks in China. So qualified foreign investments, maybe Chinese pension funds allowed to buy a few more stocks, and that there's enough money there that it could make a difference to the supply-demand
right
balance.
Definitely lots of money sitting on the sidelines. Whether they can get them all pushed into the local market, that's going to be another issue.
Sure, and that may take time, but again, you have to remember China's economic management record is pretty good. There are big external factors like Europe, but if they get the timing right, and if they want to get the timing right to look good come the leadership change, that's kind of part of this case as well. You actually have a catalyst and a specific timing.
Right. I guess the uncertainty is whether the new leadership definitely wanted to use the stock market to showcase their strength.
Obviously, they'll take a long-term view. They'll want to look good over the long term, but they certainly won't want to look bad in the short term.
Yeah, I think I agree with you that they need the capital markets to work. There are 700 companies lying there and lining up, trying to get credit. On the one hand, it creates so much supply, which hurts valuation. But on the other hand, it gives Beijing more incentive to try to make it work.
Yeah, and they also have, in the pension fund area, they have returns that are perceived as being too low from just keeping money in cash and so on. So they're looking for ways to make that money work harder for people in the future.
Right. I don't think the Chinese government has really a good track record in getting the stock market to work, though.
Well, I think that's the nature of a market, right? It's actually very hard to control, but you can control the economy to some extent, and that will help dictate earnings. And as I say, if you take the view valuation multiples can't go any lower, then that has to be good for stocks.
That's true. We may just as well give the new leadership benefit of the doubt.
Certainly if you're a bull.